Touching on interest rates. So we've had those 2 quarter point interest rate decreases this summer. So that's been fantastic. However, there hasn't been a huge spur in activity yet. Those decreases impact your line of credit or your variable rate mortgage. So anybody with a variable or line of credit is feeling a little bit better because their payments are either coming off or they're putting more money towards principal. So that's great for those types of product holders. And anybody getting into the market today is probably deliberating whether they write a variable down or they take a 3-year fixed rate mortgage. And the 5-year Canada bond influences the mortgage bond rates, which influence and determine the fixed mortgage interest rates. And you can see here, even back in May of 2024, the 5-year government bond was sitting at 3.3, and now it's sitting at 2.9. So things are moving in that fixed rate market, which does impact home buyers' buying decisions, as well as refinancings that a lot of people have been talking about with the supposed mortgage renewal wall. One thing to consider, while we still have a lot more mortgages rolling over in 2024 and 2025 and 2026, it is worth noting that that stress test that was initiated back in 2018, 2019, it forced borrowers to be stress tested at much higher rates. A lot of the people that are coming into the renewals would have been stress tested in that 5% range. And the good news is today there are a lot of rates that are hovering around that 5%. So while nobody wants to afford their mortgages at the 5%-ish rate, it is positive with respect to the affordability factor, people being able to hang on to their properties and perhaps preventing some of that speculation that perhaps there might be people that need to sell just because they can't afford their mortgages anymore. I'm not saying that doesn't exist. There is a segment of the population that will be impacted. However, I would say that it is very positive to know everybody was stress tested at a much higher rate, anticipating that interest rates would have changed in the future. And this is probably why we're not actually seeing as many mortgage holders roll over into more of a delinquent state. Now, other recent news is the eviction notice timeline that was recently announced by our government. It was changed again. So because the government decided not to do any consultation with any of its industry peers, specifically in real estate or in finance, there was a lot of pushback because while they were protecting tenants, most governments right now, their narrative is to make housing more attainable and affordable for their voting populace. And of course, by enacting the 4-month notice, that actually prevented buyers from being able to get into the marketplace, the very people that they're trying to earn their votes from. So they had to backpedal, and they're now changing the rules, but it's specific to if you are a purchaser, then only 3 months notice is needed to be provided to the tenants. They had moved it to 4, but they're backtracking to 3 months so that purchasers have the ability to secure their financing, because the 4-month was preventing them from being able to do that. So purchasers get to give 3 months notice. However, if you're a landlord, you still need to provide 4 months notice if you're trying to take occupancy of your own property. If you're a landlord and you're be selling to a buyer who's going to own or occupy, then only 3-month notice is required. And if you're a landlord just trying to move back into your own property, you have to provide 4 months notice. Not super friendly landlord rules, but it is what it is in the province of British Columbia. Speaking of changes, these are some of the summaries of changes that our recent government has made, and one of them being the Airbnb ban. And in recent news, we've been noticing articles popping up, like, for example, in tourist towns like Kelowna, not seeing the economic activity or the tourists coming into town, many blaming the Airbnb ban, which is hampering people coming into the region because there's not as much affordable accommodation. In the midst of our Okanagan region, suffering 2 years of extreme weather, decimating many vineyards and potentially wineries, as well as our soft fruit industry. We also have had multiple years of forest fires, which impacted tourism in this region. And then, of course, our government decided to enact the Airbnb ban, which, of course, hampers the economic activities in these areas. So something to consider when our time to vote arrives upon us, to keep some of these things in mind. And while it might seem like the Airbnb ban makes a lot of sense and is going to have some great impact, it's worth noting that it is actually quite negligible in the grand scheme of things. This is a source from Stats Canada. Apparently, this is a table that shows the amount of potential long-term dwellings as a shared housing units. Potential long-term dwellings, I am guessing, I have not verified, is an indication of how many homes are in the marketplace which could come into a long-term dwelling unit, aka currently being operated as an Airbnb. The entire amount of homes apparently are 107,000 across Canada. This is not even half of what we need for 1 year of new home construction. So the fact is that even if we took all Airbnbs off the marketplace, it would be a very, very short-term solution with respect to the amount of homes we actually need to deliver into our marketplace. And I would actually suggest that people start not balking at the thought of having real estate be an investment, but actually start realizing that it is. Because without somebody investing in real estate and getting a return on their capital, no one will be buying or investing in real estate. Even if you want the government to do it, just as a reminder, the government is actually spending your money. So we need to take a look at these policies and think about how they're going to impact the market. Therein lies the rub. The fact is I think that there's still going to be an upward trend eventually in our real estate market as interest rates become more affordable and people are feeling confident with their employment. One thing we do have to look out for is a weakening economy. Inflation is coming down, which is a very positive thing. But these high rates do have the possibility of impacting our economic stability. And if it does impact the economy too negatively, then we will have lowered interest rates, but for the very reasons that we don't want to have them, which is job loss. The jobs in BC have actually remained strong. Unemployment is still hovering where it was, but in all of Canada, we're starting to see an uptick in unemployment. So it is something that we have to keep an eye out on. But so far, government policy hasn't really done anything to help increase the housing supply in a very meaningful way in terms of getting homes to the market faster by making it economically viable and sound so that builders and investors enter the marketplace.